Presented by Policy Bazaar.
CNBC TV 80, the Policy Bazaar Insurance Show.
Did you know that once you purchase an insurance policy, you actually have a window of time to review, rethink, and even return the policy to the insurer if you are not happy with it? Sounds great, right? But here's the catch. Many policyholders either don't know about the benefits or they aren't sure how to use these benefits effectively. Recently, there's been a call from the government to extend the free look period from the existing 30 days to 1 full year. But what would that mean for the policyholders like you and me? Would it truly offer greater protection, or could it come with unintended consequences? In today's discussion, we break it down for you how the free look period works, why is it important, how you can use it to protect yourself from mis-selling or forced selling of insurance, and what recent regulatory changes could mean for your insurance decisions. To decode this with us today, we are joined by Mr. C.R. Vijayan, the former Deputy Secretary General, General Insurance Council, Muruga Ganesh, the Chief Operating Officer at Star Union Daiichi Life Insurance, and of course Vivek Jain, Chief Business Officer, Life Insurance at Policy Bazaar. To start with, the first question itself, and this would be for Vivek, I just want to understand first things first, what exactly is a free look period in a very, very simple language for policyholders to understand? How does it work? And do policyholders get the entire premium which they've paid, or is there some deduction when a policy is returned under the free look period?
So Yash, simply put, a free look period is a 30-day window post you receive the policy, and that can be in the physical form or it can be in the digital form in your email. After that, you have a 30-day window to review your policy, to understand if the benefits of the policy are in line with the goal with which you had bought the plan, be it a savings plan or a protection plan or a health insurance plan. In terms of refund, yes, within 30 days, if you decide to not continue with the policy for whatever reason, you don't like the features or it doesn't align with the requirements that you had, you can get a free look cancellation done, where you will get a full refund minus the deduction of any stamp duty, any medical examination charges, and maybe a proportionate of the mortality or the protection charges. But that's done on a pro rata basis, that if you've used the policy for 15 days, maybe that charge for only 15 days will kind of get deducted. But otherwise, you will get the remaining amount as a refund.
Mr. Vijayan, I want to come to you and just to decode the point on free look further. Why, according to you, does a free look period exist in the first place itself? What does it provide to the policyholders? Also, is there some sort of understanding which has emerged in the last many years? How many people tend to exercise the free look period, and what's the awareness around it? Are people actively looking at it, or it's not, people are not made aware about it as much as we think?
Let's understand one thing, that insurance policy documents is received by a customer after he pays a premium, because insurance premium has to be paid in advance. So once he gets the documents, then he goes through that, very rarely. But if they do and find out that it is not exactly what they had paid the premium for, yes, there is a necessity to have a period by which they can correspond with that insurance company, try to get clarifications, and if they're not satisfied, to say that I'm surrendering this policy, or I don't know whether to use the word surrender, that I use the principle of free look period and then buy another policy. That is one thing. As to the numbers, I have no idea. But let's understand one thing. In India, or possibly in the world, insurance is a push product. It's not that people go and buy an insurance. People are sold an insurance policy. Now, maybe after COVID and now with advancement in digital age, a lot of insurance policies are purchased digitally. And major pioneering institutions like Policy Bazaar, for instance, where you can see the conditions, compare the premium, compare the conditions with various other policies, and then buy a policy. I don't think those kind of policies will be given up because of the free look period.
Mr. Ganesh, I want to ask you one question. To your experience, what are the common reasons why people exercise the free look period that you've come across? And importantly, how can insurers address these concerns upfront so that we can minimize the instances where a policyholder reaches the point of returning the policy itself?
There are about 3% customers who are exercising the free look option, and largely the reasons are personal reasons, emergency reasons, and medical emergency. And there is also an IRR comparison between some other product, and they were thinking some loan option was available from first year. When they go through, it is not available in the policy document. And there are also people wanting to exercise a surrender and higher surrender, higher loan options. Especially in unit linked, they discover some charges are attached which they were not aware at the time of buying the policy. So these are largely the reasons. Now, how an insurer can proactively prevent this is a very good attempt. Now, there are two things which are happening in the industry level. One is we have to underwrite first and take the premium later. This is called a policyholders protection guidelines, which has come in now, and which we are supposed to underwrite first and take the premium later. If this is done, largely all those buying process would have been completed. On the second thing is now the video PIVC, the video pre-insurance verification call, is being mandatory by a lot of the bank assurance partners, and also for many lean channels. We are making the video confirmation of the customers very, very compulsory to before issuing the policy. If these two things are done, a lot of these apprehensions, these reasons can be weeded out before we issue the policy.
Vivek, I want to understand one thing from you. The language of the insurance policy document, that is again very technical in nature, which makes it difficult for a layman to understand, how should a policyholder sort of go about that language, the words, what's given in it, what's in it for him. In that context, what are the red flags that one policyholder should look out for during the free look period to decide whether to continue with the policy in the first place or cancel that policy?
To simplify the policy document that we get right now, IRDAI had come up with something called a CIS, which is a customer information sheet, which lists down the key benefits and the key points of the policy. I think that is something that can help to simplify and understand the key points about the policy. Having said that, I think it is still difficult for a person, for a layman to understand all the nitty-gritties of the policy. So I think basically one should be very, very clear the goal with which that policy is getting bought. Again, like it can be a protection goal, both term insurance or health insurance, or it is a saving goal or a growth money investment goal, right? And they should kind of check a few basic things that are there, which is in protection, the sum insured that they have opted for, the policy term that they have opted for in a term insurance, and maybe the exclusions that are there or waiting periods that are there in a health insurance plan. On the savings side, I would say they should look at is the plan a market-linked plan where the returns will be based on how the fund performance is, or is it a 100% guaranteed return plan wherein the payout, the give and the get, basically the premium that the customer will pay and the maturity amount that the customer will get is defined. So at least these basic checks are something that everybody should run, and does that align with the goal with which you're buying the policy? That has to kind of tie up.
My next question is to Mr. Ganesh again. I just want to understand so that the policyholders also get a look onto the other side of it. How does insurance companies handle the refund processing when it comes to a policy which comes through a free look period? What goes into it, and how do you decide whether a policy merits to be taken when it's returned or not?
One option which is given to customers, as good as in a medical emergency, personal emergency, they can take back the money. And we refund the money, almost entire industry the refunds the money within 7 days. And that is the turnaround time where the regulator is stipulated is brought down from 15 days to 7 days now. It's a very tight situation for the insurer to handle this within that 7 days time. If there be any delay, then we have to pay a penal interest also on the number of days what we delay. So fair amount of insurance companies settle this within the 7 days time.
Mr. Jain, I just want to understand one part from you, and this is regarding certain complex insurance products again, be it ULIP, annuities, or even health insurance policies which have a waiting period. What's the scope of a free look period when it comes to such complex insurance products? How do you go about it? What should policyholders expect in such products?
The free look rule is the same. It applies the same as 30-day free look period is there on all the three products, be it ULIP, annuity, or health insurance. So see, ULIP plans are market-linked plans, insurance plans, where you have some mortality charge for the life cover that you have, and you also have you also get market-linked upside. So the policyholders should be very, very clear that this is a market-linked plan where there will be some fund management charges, there will be some mortality charges. Some ULIPs may have other charges. Generally, online ULIPs don't have admin and premium allocation charges. But they should know that this is a market-linked plan and the returns can vary basis the fund performance. When it comes to annuities are typically bought for pension. Basically, where you kind of get generally pension for life, and that is kind of guaranteed. So they should know what is the guaranteed pension that they can expect throughout their lifetime. For a health insurance product with waiting period, I think they should clearly go through, policyholders should clearly go through which diseases or which pre-existing diseases have a waiting period of how many years. So I think these are the things that they should look out for in the policy copy to decide if they want to continue with the policy or not. So I think, again, just being clear on what is the product that they have bought, that is very, very important. And that applies to all the products.
Understood. If I could come to you, Mr. Vijayan, with my next question, how can insurers really differentiate between the people on one hand who try to play the benefit of free look period and are, not genuine cases in the right sense, as against genuine policyholders who've actually been missold some policy? I mean, this holds a lot more relevance for health insurance, where the contract duration itself is about a year right now.
If you look at the IRDA guidelines, it says that this is applicable to those policies which are issued for 1 year and not less than 1 year. So that was when the 30-day waiting period was there, a free look period was there. Now, when if it is increased to 1 year for free look period, obviously there was an earlier IRDA regulation which said that it will be applicable only to health insurance policies which is not less than 3 years old. So let's wait and see how it unfolds once the new regulations come in. Having said that, now, to differentiate between a fraudster and a genuine person, well, you know how to do that, because if somebody keeps on complaining that my policy is not good, my policy is not good, he could more be a genuine person than a fraudster kind of a character. But the insurance awareness level in India is very pathetically low. So how many people read their policies? I know in my family itself, there are many people who don't read the insurance policies issued to them. So in that case, the number of people who may come for a cancellation of a policy during free look period, I mean, I was told someone has mentioned 3%, and it could be around that level and not more than that.
As you've been hearing, it's been a very interesting discussion so far. But let's also quickly take a very, very short break. More on the other side of this very short break. The discussion continues as far as free look period for insurance is concerned.
CNBC TV 80, the Policy Bazaar Insurance Show. CNBC TV 80, the Policy Bazaar Insurance Show.
Welcome back to the Policy Bazaar Insurance Show. We continue our discussion on insurance free look period and how policyholders should look at it, and of course, under what conditions should they press the button on it. Mr. Vijayan, to start the second segment of our discussion with you, just a very curious question at this point of time. Now, if at all, assuming hypothetically, as the government has called out, the free look period does get extended to about 1 year from the current 1 month on the health insurance side. We also have the caveat of long period or long-term health insurance policies, 3 years, 5 years coming into play. In that situation, if a claim is taken within the free look period of, let's say, 1 year, what happens then? Let's say a claim is taken, the claim is honored by the insurance company to whatever extent, and then after that, the policyholder comes and says, no, this is something that I was promised, this is something that is not there as per my policy, and hence I want to return the policy. What happens in a scenario like that?
My understanding is that in case where a claim has already been lodged and taken, then there is no question of cancelling that policy. Even today, we do not allow a policy to be cancelled if claim has already been taken. So I don't think that could be a. But there are concerns. For example, I take a health insurance policy and later on find that it is only a critical illness policy. So that is clear mis-selling, and that is where I reserve the right to cancel the policy in the free look period.
To Mr. Ganesh now, now with a 1 month free look period, or even if this gets extended for a year as we were discussing, wouldn't insurers only allow return of policies if mis-selling or forced selling is established? Second part of that question, should the onus on establishing mis-selling be on the policyholders, or should the onus be on the insurer that there hasn't been a mis-selling on the other side?
We must currently prevail with the options given to customer even on any grounds, the personal emergency or in medical emergency, whatever it happens. So we shouldn't be only talking about if the mis-selling is established, only FLC has to be exercised. That option is a discourageable feature. And having said that, now, insurance is an emotional decision. A customer suddenly gets an idea, he gets a desire, and immediately discusses this with a salesperson and buys it. All these things can happen within 1 hour also. Or a good sale happens in about, say, maybe 3 days as well. And those sales are all prevailing. Large part of this, the mis-selling or, it has to be, substantiated by the insurer only. Because with the new guidelines in place where video verification we have to do, and we have to adhere to the new policyholders protection interest guidelines where we take the premium after underwriting the policy, then the ownership completely lies with the insurer. To establish a fair selling, instead of asking the customer to approve a mis-selling, we have to establish a fair selling. We adopted all these things. There is a welcome calling, there is a video recording. So for these reasons, you accepted all the terms and conditions. Here we go, right? But however, my advice to policyholders is also to keep some evidence. The age-old practice of if there is a white paper document, discussion document given, or a mail exchange between them, they should preserve that document with them as an evidence. Where when they see the actual policy and when there is a discussion document, is a large variation, then they can dispute and then establish the mis-selling.
Very important point. But Mr. Vijayan, I want to speak to you on the policyholder side. If, insurance companies, of course, come across such cases on a very regular basis. For an insurer, that might not be the case. And he will need some hand-holding when it comes to establishing mis-selling, if that has been the case. What would be your advice to an insurer in terms of, or to the insured, if he has to go about establishing the fact that he's been missold a policy?
First of all, selling a policy, the agents have to be trained, because as I mentioned earlier, digital selling or online selling, there may not be much of mis-selling, but in case of normal agent-driven policies, there could be mis-selling. See, today the agency license is issued after a training by the Insurance Institute of India, and they're doing a fantastic job. But then these trainings are not company-based, company-specific trainings. So that is one way that possibly agents can be better educated so that they explain to the customer in a better way than, what we understand currently is being done in certain cases. But insurers have to be, if they find a pattern saying that in a particular area, there are more cases of policies being cancelled because of during the free look period, then one has to understand why that happens. And these kind of things can be found out, and proper training and proper inside the company as well as for the distribution network can be arranged.
Mr. Jain, just to put a question to you, can insurers put conditions or hidden clauses? Have you come across such instances which then eventually at the time of this testimony reduce the effectiveness of the free look period itself? And if yes, how can consumers protect themselves from such practices?
No, insurers cannot put any hidden clauses in the free look period. And because it is something that is mandated by the regulator, that the full refund of premium has to happen, just deducting the stamp duty charges and maybe the medical examination charges, as I said earlier, and only the used component of the protection. Basically, if the policy has been active for 20 days or 15 days, that prorated charges of protection that you have used, only that can be deducted by the insurance company. So there cannot be any hidden charges or any hidden terms and conditions that an insurer can apply.
Mr. Ganesh, do you think an extended free look period could increase instances of mis-selling? The distributor, just to earn some commission, could say, convince a policyholder to buy a policy as by positioning it as easily refundable or returnable to the insurer, and then that actually plays out to be the case.
I don't think a mis-selling will happen because the customers have become very, very wiser. The available information on the websites and also in comparable platforms like Policy Bazaar, and you can just on a strike of a button, you can just see all policies in comparison to what I'm buying. So the information sources are very high. The mis-selling may not go up because of the extended free look period. It is not a selling tool. We must understand while we are talking about the 3% policy holders who are exercising this option, whether the learning is from the 97% of people who are making a right sale. My only advice to the policy holders also to cooperate. While mis-selling may not go up, the policy holder also has to spend an adequate time in as good as buying an asset. If he's buying a 1 crore worth asset, he will not just go cut a check and come back. He will go for a site inspection. So many things he will do, discuss with the family. Some customers, this 3% audience might be a little overconfident, and we must understand and empathize only two reasons. I would like to say this psychologically, people do this mistake from the customer side or the policyholder side, either out of innocence or ignorance. Innocence is what I don't know. This can happen. Ignorance is I know, but still the seller told me I bought it because he might give me a good policy. We shouldn't be penalizing the customers because of this. Having said that, the mis-selling instances will not go up even if we extend this for 1 year, where there is no necessity for extending for 1 year is my simple submission to who is thinking on those lines.
With that, I would want to take this opportunity to thank all our panelists, Mr. Vijayan, Mr. Ganesh, as well as Mr. Jain. And with that, we come to an end of this episode where we've tried to focus on something which the government wants to do with respect to increasing the free look period, giving more relaxation to policy holders when it comes to returning their policies if they think they've been missold or force-sold any policy, and how insurers should also ensure that the genuine cases get entertained, the fraud cases or the not so genuine cases are kept aside so that the genuine ones don't suffer. As I said, it's the end on this episode of the Policy Bazaar Insurance Show. We will return soon with another interesting topic, another interesting discussion, and some new other interesting guests on the next show. Till then, stay safe, stay insured.
CNBC TV 80, the Policy Bazaar Insurance Show.